Appears to be like a handful of high-risk groups. So if you're in one of those high-risk groups, that's definitely something you're wanting to keep an eye on. You know, if you're over the age of 50, especially if you're over the age of 65, you're certainly going to be in a higher risk category than someone younger than that. Myself, for the average person, you know, that's not falling within those ranges, the risk to us is significantly reduced. And right now, the perception is certainly a sentiment of fear. The mainstream media, a lot of governments are trying to react in a timely fashion. So overall, what's Matt McKeever's opinion? I think this is going to have an impact on our economy. There's just no two ways about it. And so because of that, this is significant. This is something we need to pay attention to.
What is up, YouTube? Matt McKeever here. Let's talk about the elephant in the room.
Well, actually, maybe first of all, we should just talk about whether I'm actually concerned about coronavirus or not. This is all painting equipment, guys, so let's not super panic, but it definitely is going to make an impact on the general economy and probably going to dictate some business as well for us, whether we're a real estate investor, a general entrepreneur, or if you're investing in the stock market. We definitely need to be aware of current events. So this to me is definitely a problems or profits opportunity, hence why we're cranking out YouTube videos so fast on it. Why not, you know, take advantage of the attention that's currently going around, but probably by just already mentioning COVID-19 or coronavirus or anything like that, I just guaranteed we got demonetized and probably shared a little bit less. But what I want to share with you guys today is really my general perception and perspective on this. Quick disclaimer, obviously I'm not a virologist, like I'm no expert. This is really just one man's opinion based upon my sole experiences and limited research. But that being said, there definitely seems to be a sentiment of fear entering the general market and the general economy just overall, and really just kind of like the social fabric of where we're at. So if you guys haven't been paying attention, you probably need to Google this and at least get a basic understanding of what's going on. Because this is such, you know, real-time data, it's constantly co-evolving, but recently we've started seeing travel bans, we've started seeing governments restricting border crossings, things of that nature. I suspect overall, this is going to be a trend that will continue. Now, that being said, let's just like take a step back and kind of walk through overall, you know, where we're at. So number one, there appears to be like a handful of high-risk groups. So if you're in one of those high-risk groups, that's definitely something you're wanting to keep an eye on. You know, if you're over the age of 50, especially if you're over the age of 65, you're certainly going to be in a higher risk category than someone younger than that. Same with if you have any pre-existing respiratory issues, things of that nature, as well if you're obese or if you're a smoker, or if you're all those things combined, then you're definitely at high risk. But for myself, for the average person, you know, that's not falling within those ranges, the risk to us is significantly reduced. But that doesn't mean the risk to our investments, our portfolios, or our business is significantly reduced. And this is something that we need to become acutely aware of as investors, that oftentimes perception can start to dictate our realities. And right now, the perception is certainly a sentiment of fear. The mainstream media, a lot of governments are trying to react in a timely fashion, and sometimes that can result in overreactions, and sometimes it can result in appropriate actions, and certainly there can also be inaction, which can be inappropriate depending on the situation. So overall, what's Matt McKeever's opinion? I think this is going to have an impact on our economy. There's just no two ways about it. And so because of that, this is significant. This is something we need to pay attention to. So looking first at kind of like the stock market overall, well, if you guys have got any phone notifications, you've probably seen that we've had multiple trading halts over the last few days. In fact, the day of this shooting, we've had another trading halt. So I suspect we're going to continue to see volatility, and that makes sense. The general sentiment from Wall Street and economists is, you know, as travel restrictions, import restrictions, as borders get tighter, as free trade is restricted and free movement of people is restricted, well, naturally, we're going to do less business with each other. As well, if people are starting to do what they're calling social distancing, which I think this is going to start to really, you know, enter the lexicon as well. If we start seeing people deciding not to go to large gatherings, or if governments start banning large gatherings, or if just in general, even, let's say just people over the age of 65 decide to stop leaving their houses, that has a drastic impact on our economy in general. That's less disposable income being spent. At the same time, it also means that we could see ramp ups in certain things. We're seeing runs on certain products, we're seeing runs on certain types of stores or produce, things of that nature. So that can actually be, a micro benefit to those individual players in the broad economy. At the same time, I think that we could see interesting things develop where more home delivery becomes more and more popular. So like maybe companies like Amazon will in fact benefit based upon all this, because I do think that overall humans will adapt their consumption patterns to a new reality. And I think that with time, we're going to look back on this, regardless of how this develops. I think that the general sentiment and impact on the overall human psyche is going to be such that we will see people starting to change their behavior patterns. And so that's going to dictate really how our economy reacts to all of that as well. So this is very much something we're going to want to watch and study. But again, I don't want to throw anyone into a panic. I don't think anyone needs to panic over this. But complete transparency, this feels like sort of a 9/11 event to me, where the event itself is of significance, but in fact, the long-lasting consequences of the event could truly outlast the initial impact of whatever that instigating event was. So I wouldn't be surprised to see, more restrictions at border crossings even after this, dissipates, assuming it dissipates at some point. I could see, protectionism re-entering a lot of politicians' vocabularies, and that really resonating with people as well. We could see anti-immigration policies start flaring up as well because of this, or even just anti-travel in general. So again, I'm not saying that this is my opinion, I'm not saying that this is good or bad, but it's definitely something that we as investors, whether again you're investing in stocks, small businesses, or real estate, we need to be acutely aware of this, because again, in general, I've been ignoring this up until quite recently because I didn't see how it was going to impact the general overall economy on a wide scale. Now that I'm starting to see things like the NBA canceling games, there's starting to be celebrities getting it. And again, not that celebrities are more important than the average person, but the celebrity's impact on the general social fabric of what's going on in society is greater. So when someone like Tom Hanks gets it, or when an NBA player gets it, all of a sudden people are going to talk about more. Once people start talking about more, that starts just like creating more general misconceptions, fear. We get more and more games of broken telephone where facts keep getting more and more distorted. And I think we all know on the internet it's pretty easy to get facts and fiction mixed up on a regular basis. And then once you add time-sensitive nature to it and really a true risk, or at least a true risk to certain portions of our population, well then that really speeds up the misinformation. And again, perception can become reality. So even if this doesn't have a drastic impact where death tolls in the millions, it can still create billions or trillions of dollars of impact just based upon how we as humans react. In general, once there's uncertainty, once volatility enters, the general economy, it has a compounding effect where people want to keep getting out. Like I want to, I guess what I'm trying to say is we have such an initial loss aversion as humans, and this is true especially of my fellow Canucks, my fellow Canadians as well. We'd much rather not lose something than have the opportunity of doubling or tripling something else. The moment we have something, we don't want to lose it. And so I think a lot of people are going to really start having that scarcity mindset enter into just their overall attitudes. And again, with that scarcity, all of a sudden we start to see, reductions in consumption. People start saving more. And again, that will slow down the general economy. So what does this actually mean? Well, it means, Matt McKeever, I'm probably not investing in stocks in the near future. I don't like the volatility, and we've discussed this before on my YouTube channel, but I don't like the lack of control I have over stocks either. And you want to know what really highlights a lack of control, in my opinion? Having trading halts, where all of a sudden you literally cannot sell the thing that you own anymore, regardless. Maybe you did want to sell at the absolute lowest price and just get out of it. Well, we've lost all control of that once a trading halt happens. And now that they're literally becoming a reoccurring basis almost at this point, it's important we just understand that. And at the same time, it's not like we didn't have a good bull run in the stock market, right? This is historically the longest running bull market since like 2009. Been a pretty good stretch. So I'm not going to be investing in stocks. I know that there will be winners and losers in the stock market, and some people will come out as champions and make tons of money. In fact, I'm sure a lot of careers will be made and broken during this time phase, during this just general, this general concern and the volatility going on. But me, I'm not interested. But if I was to pick things, I think, companies and services that can deliver remotely to their customers are certainly positioned to do well. So I think like Amazon. I think Amazon's going to do well for a multitude of reasons, but one, I think Amazon deliveries will go up. I think volume on Amazon will go up. I also think like Amazon Prime and Amazon Music will do better because of it, and I think Audible will do better. So it feels like Amazon's well positioned for this. As well, companies like Netflix. Again, if we start to see general forcing of closures of schools or government facilities or banks, things of that nature in North America, that's going to dramatically impact the public perception and even just what we can do. So all of a sudden, if they start closing restaurants, if they start closing meeting halls, if they start allowing us out into public in general, well, certainly we're going to be staying at home a lot more. So online shopping seems like it would go up, and online consumption of any sort of content should go up as well. Hopefully that means I'm going to get a hit for the YouTube algorithm as well, but fingers crossed on that front. Moving into real estate, what I think we need to really do is parse, is this truly a black swan event? Is this something that's really going to change the fabric of humanity? Or is this just a blip on the radar? Or is this truly us making a mountain out of a molehill? Those are kind of the most likely scenarios in my opinion. So scenario number one is things all go back to normal, and this really ends up being more like a SARS or H1N1 event, where certainly it's unfortunate for those that were affected, but overall, we kind of continue doing what we do, and we kind of forget about it. I personally feel like the ship has almost left the harbor at that point on that option, but it still seems plausible, but not likely in my opinion. Then the next option is, this has an impact, not a massive impact. We're not talking post-apocalyptic, end of the world scenario, but it has lingering effects. So that could be things like, lingering travel bans, stricter border crossings, more screening at airports, maybe more restricted trading, so less free trade in general. That to me feels like a very likely scenario currently, but we'll see how that evolves, and again, time will really show who's right, who's wrong, and no one has a crystal ball, so I do not want to imply that my crystal ball is working better than anyone else's. And then finally, this could truly be a black swan event, and life will never be the same again. Right now, I don't see enough data or information to make me think that that's a likely event, so I'm not going to overly invest a lot of time or energy preparing for it. So in general, right now, I kind of feel like we're likely in that middle of the road case. So what does that mean for real estate? Well, overall for real estate, I think that everything's going to work out fine, depending on what aspects of real estate you're investing in. So the areas in real estate that I think will be most likely hit, that's things like new construction, that's luxury homes, that's overpriced, non-cash flowing multifamily properties. When I look at, what we're doing here in southwestern Ontario, I in fact still feel very confident. Minimum wage, let's talk about affordability. Minimum wage is still $15 an hour. Doesn't matter where in the province of Ontario you are, that's where it's at. Do I think that that's likely to drop in the near future? No. And any politician that looked at dropping minimum wage is probably going to be voted out at the next opportunity. So assuming minimum wage is stable or potentially could increase in the future, what that means is the affordability is still there from a rental apartment perspective in southwestern Ontario. $15 an hour minimum wage, a full-time job is considered about 2,000 hours a year. That's about $30,000 a year in earnings. Now, if we take that $30,000 a year in earnings and apply the average Canadian spending ratios based upon Stats Canada information, average Canadian, they're spending about 30 to 40% of their income on shelter. So that means that person making $30,000 a year on minimum wage, they can in fact afford to spend about $10,000 to $12,000 a year on shelter, or about $1,000 a month. All of a sudden, the fact that I'm renting out a one-bedroom apartment in London, Ontario for $1,000 still seems like a pretty stable value proposition overall. If I can rent out my apartments to someone on minimum wage and still cash flow that rental property, that seems like a very robust, stable business model to me. So I'm not too concerned about the impact on my overall market or my overall business model. But if I was buying properties that didn't cash flow, that were at the absolute top of the rent markets, so let's say I was renting luxury apartments here in London, Ontario for $3,000 a month. Well, now that becomes more concerning to me because there does feel like that's a less resilient business model. You know, if we start to see the economy slow down, if we enter a true recession, if spending starts dropping, people are going to start to really try and retract their spending. And all of a sudden now my pool of potential candidates for my rental property is going to be significantly lower if we see any sort of drop in the employment rates. You know, if we see any drop in the median income of Canadians, that would certainly be concerning for that business model, in my opinion. But again, I think there's still a lot of opportunities, and long term, I suspect this too will pass. So what I mean by that simply is, you know, whether it's 4 weeks, 4 months, or 4 years, I suspect that the economy will bounce back from this, and in fact will come back even more robust because there will be a fear of missing out on the next upswing. And we've started to see this a lot more common just as information's been more and more democratized here because of the internet and just the free-flowing communications we have these days. So if and when we start to see that turnaround in the stock market or the general broad economy, then I really think we're going to see a lot of money dogpiling in to try and get in and get that upswing, right? There's going to be such extreme FOMO in regards to missing out on that upswing that I suspect there's going to be a lot of money to be made. There also will be a lot of mistakes made as well. I don't know when that upswing comes, so again, that's personally why I'm not as interested in stocks, because I don't have control over those assets the same way I do real estate. If things start getting a little squirrely here in regards to renting out properties, I can always move into one of my rental units. I can always put them up on Airbnb. If Airbnb all of a sudden gets banned because, you know, things are getting worse and worse with the virus, well then I can pivot and go back to a general rental. Well, if that doesn't work, maybe I can try and rent to own my property, or I can put it up for sale. Again, it may not be ideal, but to the best of my knowledge, the government's never stepped in and made it illegal to sell real estate. But the government regularly steps in, or regulators, I should say, regularly step in and halt things like trading on the stock market. So again, to me, it all comes down to having control over my investments, and during times of uncertainty, having control over my investments gives me more certainty in my investments. Hope that makes sense, guys. I'd really love to hear your opinion, though. This is a very complicated and nuanced subject matter, so I'm sure I made a lot of mistakes or missteps in this general conversation. This was really shot one take, so cut me a little bit of slack, but I'd love to hear your opinion in that comment section. So jump down below and let me know, is this virus, is this general pandemic, is the general concern in the overall social fabric, is that concerning to you guys? Are you changing your consumption habits? Are you noticing other people changing their consumption habits? Are you going to change your investment approach? You know, are you changing the investments, the class of assets you're getting into? Are you trying to start holding cash? Are you moving into alternative currencies? I would love to hear what you guys are doing and what your general perception is, and you know, where on the scale of concern you land. Jump in that comment section down below. Let me know as well. If you guys enjoyed this kind of stream of consciousness video from me, what I need you to do is smash that like button, hit the subscribe button if you're new to my channel, and then until next